Fraud is on the rise, as you would expect when nobody can afford anything in Canada. So let's get right into what's going on. Let's first of all talk about the housing market, because mortgage fraud is of particular importance to the economy in Canada. So how bad will housing get? The chill gripping a once hot housing market offers a test. So what I want to take you to is down here, because this basically shows you the problem with Canada and the countries which are having major problems right now with their housing markets, including Luxembourg as well, which is a country I've actually visited. So Canada, Australia, and New Zealand are the suspects on that list, but you've also got the UK and you've also got Ireland that is also appearing on here. But look at this, 553% growth over the past 25 years. That is why so many savings go into the housing market in Canada. That is why so many pensioners are dependent on the housing market in Canada, because it's outpaced everything. That's why everybody has shoved all their chips into the housing casino. So it's going to be very interesting to see what happens moving forward. But obviously the dependence that has formed now is absolutely crazy. And I showed you this chart before, but Canada's housing dependence is 41.8%. 41.8% investment in dwellings as a percentage of total gross fixed capital formation from 2017 to 2021. So that just kind of shows you how crazy this is. And fraud is on the rise right now in this housing market. It's not just the housing market, it's pretty much anything: credit, cars, credit cards, and the mortgage sector. So let's get right into this. So this comes out from Equifax, which is one of the credit bureaus. So new data suggests an increase in fraudulent activities within the automotive, credit card, and mortgage sectors, according to the latest Equifax Canada Fraud Trends report. Additionally, the report suggests the uptick in fraud is being driven by financial pressures faced by consumers and by bold new schemes being used by fraudsters. But the thing is, they've been going on for a long time now. Like, the fraud really ramped up during the final blow off top in the housing market, when you saw that parabolic rise that happened in 2021 and into 2022. When you saw that happen, fraud just skyrocketed. It even got into the mainstream news. It's something I've been talking about since 2021. But you know, this is a major problem, and it happens in all bubbles, because guess what? People can't afford to buy these homes, so they have to start fudging their income numbers. They have to start amending different tax documents to make it look like they are better than they actually are to the banks. And the banks, they don't double check these things. I mean, the banks are full of moral hazard, and a lot of that has come from things like the CMHC and has spilled into the uninsured mortgages as well. I mean, you have to think about it. The banks target the amount of loans they write for specific areas. If you're targeting the amount of loans you're writing, you're going to get major problems. I mean, it's a conflict when you think about it, because now it's not about getting good quality borrowers. It's about area managers and branch managers fulfilling their targets for issuing loans so they can get their bonuses. It's not about the credit quality, which has gone out the window. So let's continue on here. In the automotive sector, fraudulent applications have risen by 28% in the past year. This has been concurrent with a substantial increase in legitimate applications, highlighting the audacity of fraudsters. The credit card sector has also witnessed a large increase in both application volumes and fraudulent applications, rising by 37.9%. Similarly, the mortgage sector has experienced an 18.8% year-over-year increase in the fraud rate, with first-party fraud accounting for 54% of all fraud type observed in Q2 2023, up from 46.5% in Q1 2023. So fraud isn't going down in the housing market, it's actually increasing. It's actually accelerating, believe it or not. That's what they're saying here. And obviously take these numbers with a grain of salt, because they're probably likely higher than that. And this isn't even a comprehensive report, because you've got other credit bureaus as well that are involved in this, like TransUnion. So it's very interesting what's going on here. But this is an absolute disaster when you have this high amount of fraud. But really think about it. It happens because people cannot afford what they are buying. They can't afford the car. They can't afford what they're buying, and they need the credit card. That is why there is such a rise in credit card applications and credit card balances. I mean, they hit all-time highs, as we'll get onto here. So with respect to mortgages, some home buyers hoping to enter a pricey real estate market are willing to fudge their salary numbers on an application, said Carl Davies, head of fraud fraud and identity at Equifax Canada. This isn't just a little white lie, it's fraud. It's a serious crime. If interest rates remain high, this trend could easily accelerate in the months ahead. But I disagree with him on that, because it's been going on for a lot longer than just since interest rates rose. Again, every time you hear people talk, it's like they have long-term memory loss, because they can only seem to recall events from the shorter term, like the past year or so. But after that, they just forget what's happened. So in 2021, we saw mortgage fraud that went rampant because people wanted to get into the housing market. They wanted to speculate, so they fudged their income. There was all kinds of shenanigans going on in the housing market in 2021 and 2022, but it's just increased and increased and increased, because as affordability gets worse and worse and worse, people have to do more and more to get into the housing market. More risk has to be took on by the banking sector. Just think about it. Without the fraud, I wonder how this housing market would be performing right now. It would be performing even worse. But as we know, this is not a good long-term thing. This will end badly, just like it did in 2008 in the US, because it's exactly the same problems we're seeing repeat in Canada, Australia, New Zealand. So it's absolutely nuts. And then we'll also get onto the fraud and car thefts. We'll do that for another video. But I want to show you the impact of what's going on. So as the impact of high interest rates take hold, growth in consumer spending slows and financial stress rises. So again, this recently came out and it's not saying good things about the consumer. Canadian consumer debt reached 2.4 trillion. Just think about that for a second. How big a number that is, 2.4 trillion. It's actually larger than GDP in Canada. It's actually larger than what Canada produces. We have more debt. So, if we're not producing the same amount of GDP or more than the amount of debt we have, we obviously know that is a pyramid scheme and it's not going to last long term. But people, refuse to believe. They think this can just go on endlessly, which is just kind of crazy. So let's see what's going on here with the consumer. So in the second quarter of 2023, with credit card balances reaching an all-time high of 107.4 billion against the backdrop of rising interest rates, credit card spending growth showed signs of slowing. So the growth showed signs of slowing, but the debt is continuing to pile up because people can't afford to pay these credit cards. Having credit card balances rise is not a good thing in your economy. And think about how high the interest rates are on credit card debt. I mean, I haven't even checked because I don't have any, but it's probably 30-40%. So that is an insane amount. And a lot of people, they just pay the interest. They just pay the minimum payment. So they're not even paying down the principal. And then they've got all these other expenditures like the high mortgage costs that they're having. I've even heard about people paying their mortgage with their credit card. So it's just nuts what is going on right now. It does not say good things about the consumer, and it does not say good things about the economy moving forward either. So it's kind of crazy when you get into the average debt. I think this is really interesting. So it breaks it down by age groups, and you can see where most of the debt is held. Most of the debt is held between 46 and 55, and we're talking about debt excluding mortgages for this right now. And then also you can see here it shows the different outstanding debt amounts Q2 2023 for different cities across Canada. You can basically see what's happened with the debt change year over year, what's happening with the delinquency rates, usual suspects with the highest delinquency rates. And you can see delinquency rates up 17% in Calgary, 21% in Edmonton, 30% in Halifax, 32% in Montreal, Ottawa 32%, Toronto 40%, no surprise there, 39% in Vancouver, again no surprise there, 24% in St. John's, Fort McMurray up 30%. And again, Fort McMurray, that doesn't mean the energy sector is booming if delinquencies are rising there, does it? But what I want to show you is that all these delinquencies are rising year over year. So this is not a good thing. This is a really, really bad thing when you think about it. And if we look at the average debt now by province, you can see what's going on here. So you can see that in Ontario, the delinquency rate has jumped 37%, Quebec 30%, Nova Scotia 25%. If you look at Alberta, 18%, one of the lower ones actually for now, but they have higher debt amounts, so that's going to change probably. And then British Columbia 34%. You've got Canada as a whole, delinquency rates are up 30% year over year. So this isn't a good thing when you've got delinquency rates obviously rising as fast as they are rising right now. now, when you've got fraud as prevalent as it is right now. We're not just talking about mortgage fraud, although that's accounting for over 50% of the fraud cases. We're also talking about people lying to get an auto loan, lying to get a credit card. And you know how many of those credit card applications are fraudulent, as we've talked about before. You know, people applying for extra credit cards, that is not a good thing. That is not a good thing at all. More credit card debt is not a good thing, especially at these high interest rates. So people are buying food on their credit card. People are living on borrowed time right now in Canada. So really just prepare, because things are going to get gnarly, I believe, over the next 6 months. You're really going to see it even in the mainstream come out about how bad this economy actually is. We had the GDP numbers that came through, and we went through that the other day, and you saw that the economy is stagnating, and that's just using their funky numbers. But if you actually look at real numbers, the economy is contracting, and that does not mean good things. Just look at those unemployment lines. They are Great Depression level type stuff. It's not good at all. So anyway, thank you so much for watching. If you've enjoyed this, you might like this playlist here. You might like this video here. If you want to help support this channel, go to patreon.com/marketmania. If you're looking for a VPN to get around Bill C11, go to expressvpn.com/marketmania. Thank you so much for supporting the channel. I will see you in the next one.